So Dan Hatcher is what we call a Hall of Fame producer, and that is a minimum of 400,000 a year or more. Dan, in June, I just looked up his volume. He's at 70,615 issue paid for the month. So when you talk about a guy with the fruit on the tree, Dan has the fruit on the tree. But what I love about Dan is that he's a great human being. And he told the story last time he was on. Francis and I were talking about it today. A lot of you guys have heard of Juan Franco. He is just such a great businessman, growing a big team, and he's just a blessing. He's creating a lot of wealth for a lot of people. So Dan and Juan used to sell books door to door. Dan's from Colombia. I'm sorry, Juan's from Colombia. And so Dan sponsored him to come into the country. And today Juan's a citizen. Not only that, he's been in a variety of different businesses, but most importantly, he is really making a difference in a lot of people's lives by growing his business. So Dan, I so appreciate you jumping on here. Just let her rip, man, because you're the guy that everybody needs to copy and duplicate. And you're the best in the business. So welcome to the team meeting.
Well, I don't know about that. That's a lot of grandiose verbiage there, but I do okay. and but the Yeah. First of all, I'm honored that you'd ask me to and entrust me to share something of instructional value to your team here. You're I guess you don't do that with everybody, right? So I appreciate that, and that is not lost on me. A couple of things, about before we get into what I'd like to do today. And actually, Neal asked me to do this, and because I did this for our team here last week or week before last, is today I'm going to show you what my presentation is. Okay, so and this is going to be recorded. You can go back and if you like my presentation, I would suggest copying it because it works. Okay, but couple of things before we get started with that. I just want to share with you, because the thing is, you can have a great presentation, you can study all this and get it down pat, and still fall flat on your face. And and the things that will keep you from doing that, however, are very few and simple to guarantee, things that to guarantee your success. And number one is to buy leads. It's just math, you know. If now you don't have to buy leads. I want to make a caveat here. You do not have to buy leads, because if you don't have the money to buy leads, which is the case for a lot of people, then you need to create your own. Period. But without people to talk to, you're not in the insurance business. I hope you understand that. If you don't have anybody to talk to, you are not in the insurance business. You can say, hey, I'm studying to be in the insurance business. I'm learning about the insurance business, but you are not in the insurance business unless you have people to talk to. Now, you can get those by buying the leads, or you can get them by generating them yourself. And there's people in Juan's group that they don't buy leads. Now, they spend money other ways. They spend money going on social media and become parts of becoming members of groups, and then paying to present to them. There's all kinds of different ways you can generate your own leads. But either way, you're either spending time or money for leads. So first of all, buy leads or generate your own. Period. And don't deceive yourself if you're not doing one or the other of those. Okay. And then let's see and then the other thing, as I would say, is find a presentation that you like. And I'm sure you on y'all's website or in your boot camp, y'all have one that I did some time ago, and you're fixing to have, I guess, the one I do tonight. But you probably got some that by Neal or Francis or any one of a dozen other people out there that's doing successfully, selling lots of business and doing it successfully. Pick one. Don't meld a whole, don't say, oh, I like this and that and the other from this guy and that one. Just pick one and then copy it word for word, and don't try to overthink it, and don't try to think that you know better and you're going to change up something. And just a case in point is I had this lady, she learned the presentation, and I had her give me the presentation after she was falling flat on her face for a month. She hadn't sold a thing, been making all kinds of presentations, hadn't sold a dime, not one policy. So I had her do the presentation for me. So about 3 weeks in, actually. I had her do the presentation for me, and she did it perfectly, all the way up to the point where she got through showing the illustration. And then she leaned back. She says, "Well, would you like to apply?" And um, I asked her, I said, "Where did you get this? You didn't hear this from anybody or any presentation you ever saw." She says, "Oh, well, that's just the way I like to do it." And I said, "Well, you're not selling anything, and that's the reason why." Okay. And, so like when we go through the presentation, you'll see the close that I use. Juan Franco uses a different close, but the thing is, the close is very similar because we're not putting pressure on people to decide about, getting signing up for an IUL. They're deciding on how much to apply on their IUL, but they're not deciding, do I want an IUL or do I not? Okay, there's a difference. And so how you ask that question is immaterial, but I would pick Neal's way, my way, Juan's way, Francis's way, whatever. If you got somebody and you feel comfortable with it, do it their way, but do it their way every single blooming time. Does that make sense? And let's see here. Um,
I shared my screen, so you can share it if you need to.
okay, all right, yeah. So after, yeah, and then what I would do is that after a while, after you've learned the presentation, you got it down. After a while, go back and review the presentation just to make sure you haven't changed it. It hasn't morphed over time. Just FYI, because that happens to me. My sales will slump. I'll go back and review my presentation. I go, oh, I haven't. I changed that up. Didn't even realize I did it. Okay. So anyway, just FYI, that's what I would say about to preface all this. Now, what I'm going to do, I'm going to share my screen here with you. And now, what I'm going to do here, Neal, you're going to be my client. You're like 45 years young, okay? And so I'm going to use you're going to be my client here today, okay?
Now, Dan, this is the presentation you started with back when you got going, right?
Mm-hmm.
You learned this from Juan, or did you
Yeah,
and Juan develop this?
yeah. No, I learned it from Juan, or yeah, actually, yeah. And it's the same presentation I've always used. Um, there's only one thing I really do difference, and that is I just show people 1,000. Hey, if you put $1,000, and I show them that, and then I ask them, "What's your budget?" So and now my sales are higher. My average is per sale is higher, and so you'll see this here in just a second. But anyway, Neal, yeah, I'm gonna share my screen here with you. First of all, Neal, we got on the Zoom call, and I'm just gonna say, hey Neal, I'm Dan, and got a question for you. You and I. We haven't met yet, or we just talked on the phone just real quick. But just real quick, if you would, you saw this ad in the video, and you went to the website there. What is it about this that piqued your interest so much so that you filled out that form, and here we are talking?
Yeah, so I'm an independent contractor, have been my whole life. I don't really have a retirement plan. So this just caught my attention. I thought maybe this could be what I've been looking for. Because I've tried to do those other programs, with the 401ks and all that kind of stuff, and it's just really complicated. This just seems pretty simple.
Now you say you tried the 401ks. I take it that you've cashed them out, or you're just not contributing to them anymore.
We don't contribute to them. Yeah, early on, when we worked for companies, we did, but since we became self-employed, we just don't
You
do
kind of
that
quit
anymore.
that. Okay. So how much money do you have in your 401k or Ks?
They're gone. We don't have them.
Okay, they're gone. Okay.
Yeah,
So you drained all the money out of them,
we did. Yeah,
right? So but currently you have no retirement plan.
correct.
So I take it as that's kind of the important kind of thing to you, right?
That's the main thing.
Now you mentioned you're a contractor. Do you fix and flip, or what do you contract? How do you what is it that you contract?
Yeah, we're in real estate, so everything we do is just 1099 income, and so we make good money. But we've just, you hit your 40s. It's so nice to be 45 again. You hit your 40s, you start thinking, wow, 50s and then retirement. So it gets real in your 40s. So yeah, so we make good money, but we just need a place to put it. And I like the tax-free retirement income that
Okay,
you can pull
okay.
money out down the road.
All right, now tax-free retirement, and so now have you heard about or I guess have you been doing some research on these IULs already?
Yeah, I have. I've been studying up on IULs, been watching some Doug Andrews stuff.
Oh,
And
okay.
then there's a ton of little short videos, but I just thought I need more information than just a short little, 30-second Instagram.
Right. So you haven't talked to anybody like me to dig into it deep, but to see
I
what's going
have
on.
not. No.
Okay. All right. And yeah, so it's tax. So you're looking at tax-free income, and I guess you understand also you can use this as your bank, correct?
Right. I saw a video on that.
Now, do based on what you studied, do you have any ideas or have any thoughts on how you might use that as your bank for your current business, or no, or is that not a big deal?
I haven't really thought about it. I mean, we don't have any trouble financing things,
Hmm.
but I want to start socking money away. I
Okay.
guess it's
Okay.
just a good feeling.
All right. I tell you what I'm going to do. I'm going to share my screen here with you real quick,
Mhm.
and so tell me when you can see this.
Got it.
Okay. Now, first thing I want to do is I want to show you this right here is my driver's license, and I live in Arkansas, and this is my Arkansas state license. Okay, and this is my home, 1320 Tree. You can look on Google, see my house. You can go to realtor.com. You can see in my house. And now it's the other people's furniture before we bought it, but it's and but you see here this is my personal cell phone number, my Facebook page if you want to see my all about my family. The reason I wanted to show you this is now oh, yeah, and the other thing, now you're in Tennessee. This right
Right.
here is my Tennessee license, okay? And this is my Tennessee license number. The reason I wanted to show you this right off the bat, and I like to show this to people, is because you found me on the internet and you don't know me, right? And we're fixing to be talking about your money and your health, and those are two very personal things. And so I just want you to feel comfortable and confident that what we talk about here today, Neal, is going to stay between us two. Okay.
Perfect.
And
Good bit.
and in fact, if I misuse your information in any way, I'm with this number right here, you can file a complaint against me in the state of Tennessee. Now I'm licensed in 44 states. So a complaint against me in Tennessee is a complaint against me in all 44 states I'm licensed in. So with that number right there, you actually have the power to ruin me financially. And I want you to know I am not going to lose my living over one sale. Does that sound fair?
Yeah, that's fair.
Okay. Now, if you would, are we on your phone or a computer?
No, I'm on a computer.
Okay. Do you know how to do a print screen and know where it saves it?
Yeah,
Okay. If you would, just do a print screen of this right here and let me know when you got it.
got it.
Okay. And do a print screen of this right here and let me know when you got it.
Got it.
Perfect. Okay. Now, the other thing I want to explain to you is I am an independent broker and I'm contracted with about 40 different carriers. Now, of course, not all of these do IULs, but some of them do, like Foresters, AIG, Mutual of Omaha, National Life Group, AmAm, Transamerica, and F&G. They do IULs. Now, the company that we like is this National Life Group. Now, National Life, they started 1870 or 1848. They're 176 years old now, and third oldest insurance company in America. They are the number one IUL company in America. They place more IULs than any other company, and not by a little bit, but by a lot. And there's a reason for that. They don't even advertise, and they're still number one. Okay, and the reason is because of the returns they get for their clients. They're also a mutual company, which means that the owners of the company are the policyholders. That makes a difference in how they run their company. It's when the policyholders are the owners instead of investors. Does that make sense?
Yeah.
Okay. Now, they're also A plus rated. Basically, what that means for you is that any A plus rated insurance company, your money is actually safer with them than it is in your bank or on Wall Street right now. Okay. And in fact, because they have more money than they have in liabilities. But the way that an IUL, and I know you said you've been doing some study, and I just want to make sure that we're talking apples to apples about what an IUL is, okay? Because the Index Universal Life, it can be used for tax-free retirement income, and we've already covered that. You understand that, correct?
Right.
Okay. It participates in market upswings, but not the downswings, so there's no risk of loss. And we didn't talk about that, but have you understood that concept? How that works?
Yes. Yeah, there's like a zero floor.
A zero floor. That's correct. So when the market's going up, your money's going up. When the market goes down, it stays right where it was. Okay. And it allows you. It also allows you to use your bank as or your account as your own bank. Now that's very powerful. And whether you use it or not is up to you. But that's a very powerful thing right there that can add to your retirement money. And let's see. And then. And you have to kind of think of it as a 401k without all the government rules, okay, and with zero risk, okay. And now this right here is a chart that kind of explains how the money works in an IUL. This is an annuity, but annuities and IULs would work the same way. But this red line right here, this is what the S&P does. Started in 98, and then it went up to 2000. Then it had that big drop. And then it took 7 years, or it took till 2007 to catch back up, and then 2008 happened, and it took till 2013 just to get back to break even, and then it took on off from there. But you notice this green line, this is what an IUL or an annuity looks like. So when the market's moving up, your money's moving up, but when the market goes down, your money stays flat. And then the market, if it's moving up, you're moving up again. So it doesn't even have to rebound to where it was before. If the market's going up, your money's moving up. And because of that, an IUL will almost every single time over a 10 to 20 year period will always outperform the market. And because you're never having to make up for lost ground. Okay, for instance here, my father-in-law had 600,000 in his TSP in 2008, and in 2009 he only had 300,000 in it.
Whoa!
And if he kept taking money out of it at the same rate he was, it would have only lasted him 7 more years, and he'd been done. And so he ended up having to take a job delivering cars. He did those dealer swaps. Okay.
Yeah.
And he did that until around June of 2013, when the market got right here back to break even, and then he retired again. Okay. Now, if he'd have had his money in an IUL or an annuity, it works the same way. Because they don't participate in downswings, that 600,000 would have been, in 2009 would have still been 600,000. And then 2009 was like a 35% year. He'd have had like $780,000 right, at the end of 2009. But instead, he only had 300,000 plus 30%, 390,000, and still wasn't even back to break even.
Got it.
That's the power.
He could have been fishing all those years.
So what? He could have
been fishing all those years
instead of driving cars around. That's right.
Instead of driving cars.
Okay. Now, any questions so far?
No, it makes sense.
Okay. All right. Now, what I'm going to do here, this right here is the National Life Group software, and what we're going to do is we're going to create an illustration here for you. This is the fun part. Okay. And let's see here. Now, you are in Tennessee, and
hey, Dan, I want to interject something real quick. There's people asking to get a recording. Anybody on the team automatically gets a recording tomorrow morning. We do that standard operating procedure. If you want a recording, join our team if you're not on our team. Okay, go ahead. Sorry about that.
All right. So you're 45 years old, and do you smoke, Neal?
Non-smoker.
All right. And then yeah, and how tall are you?
6 foot.
All right, let's see here. Oop, you're 6 foot, and let's see here, and about how much do you weigh
About 215 on a good day.
on a good day? Okay. All right. Where is it? This right here. Yeah, there's 6 foot and 215.
Yep.
All right, perfect. That puts you okay. Perfect. That's good. That's good. Okay. All right. So here's the thing. Let's see. There's three ways that we can build an IUL. Okay. The first way is called minimum death benefit maximum cash value. Kind of think of an IUL. It has two buckets in there. There's an insurance bucket and there's a cash bucket. And so what the goal is with most people that we talk to, they're not getting an IUL for the insurance. They're getting it because they want to grow money for retirement and to use as their bank. So we're making the death benefit as small as we can for their budget so that the least amount's going to pay for insurance. The most of it's going to go into your cash bucket. And that's what's invested on the market and is compounding for you and is going to grow for your retirement in your bank. Okay. Now,
Okay.
if having more insurance is important to you, then we'll pick one of these other ones because say that you just bought a house, you got little kids at home, and you want to make sure if something happens to you, the wife doesn't lose the house because you're gone. Okay,
Right.
and
Yeah,
and you don't have any other insurance, so we make the insurance bucket a little bit bigger, but a necessity that's going to make the cash bucket a little bit smaller. So my question for you is, based on what it is that you're wanting to accomplish with your IUL, which way is it minimum death benefit, max cash value? Is that the way you want to build this, or would you rather have a little bit more insurance?
No, I have another policy
Hmm.
which covers all our debt and then some. So let's do the minimum death benefit max cash value.
All right, perfect. So we're going to set this. This is going to figure this automatically for you because of your age. Increasing is the best way to do it. The new retirement age is 67. So I'm gonna have you fund this to your age 60, till you're 67. Okay, and now in terms of a let's see, in terms of a budget, what we can do here is I mean just to kind of show you how this works, we're just do this a nice round number. We're gonna do $1,000. Okay, so if you're putting $1,000 a month into your IUL, that's $12,000 a year, and let's just see what this would look like here for you. Okay, all right, so this $1,000 a month right here, I want that is your planned premium. Okay. Now I use air quotes here, planned premium, because you do not have to put $1,000 a month into your IUL. I want you to understand this. This $1,000 a month is going to get you $205,349 in death benefit. The cost of that 205,000 is 1,505. Okay. This 1847 is the minimum that you could put into this per year and make sure that the insurance doesn't lapse. So 1,800. So about for about $150 and $155 a month is your minimum is your minimum payment. So you can put in between $1,000 a month, which is 12,000 a year is the max you can put in. $1,000 a month is your maximum, and $150 or $155 is your minimum.
Okay.
Okay, so what the way that works is say hey one month you had the car broke down, you had to replace the transmission. You don't want to put $1,000 a month. If you apply and you get approved, you'll have access to your account on an app on your phone, just like your checking account. And so you're going to go down here when you open up that app and you go down to payments, and where it says 1,000, say, hey, I only want to put 200 in there this month. You change that to 200, and it's going to bill you 200 until you go back in there and change it again. Okay, and you can also, like, say you got a your tax refund, $3,000, and you want to put 2,500 of it into your IUL. You open up the app, you go down to payments, and you do a one-time contribution. I want to put 2,500 in there. The next day they'll draft your account and stick the 2,500. But the thing is that when you get to 12,000 for the year, you're done.
Got it.
Okay, so 1,800 once you put in once you've made two payments of 1,000 into your IUL. or two contributions of 1,000 into your IUL, you literally do not have to put any more money into this for the rest of the year. You understand
Hmm.
that?
Okay.
Okay. All right. This is what's called the MEC. This is the only place the IRS has a say so in your IUL. And that's basically it says, hey, if you're getting $205,000 worth of death benefit, and if you put a dollar more than $12,000 into this, then we're not going to consider this insurance anymore. We're going to consider it a retirement fund, and then they're going to tax it like an IRA. So, in
Okay.
other words, if you want to put more than 12,000 a year, we just have to add more insurance. Does that make
Makes
sense?
sense. Yeah, makes sense.
Okay. All right. Now let's take a look here at the way this works. Okay. So this $12,000 a month, that's $12,000 a year. $1,505 is going into your cash bucket or into your insurance bucket. 10,430 or 10,403 is going into your cash bucket, and that's what's invested on the market and is compounding for you, every year until you retire. And now this is going to now this is National Life Group's software. They illustrate this at a very conservative 6%. Okay, remember how I told you they are the number one IUL carrier in America, and that's for a reason. Okay,
Yeah.
they're going to average between 7 and 8%. Okay, depends on what the market does. They could average 10 or 12%. Because you can do this without caps. But let's just say it's 7 or 8%. Because the thing is, the reason they do that is because what they don't want to do is they don't want to say, hey, in 5 years, if you've been putting this $10,403 into it for 5 years at 7%, you're going to have $78,000. Well, they don't want to say in 5 years you're going to have $78,000. They're going to say, yeah, because what happens if you came in at 68,000? Well, you'd be all over the internet talking about how National Life Group, how National Life Group and Dan Hatcher lied to you, get you to take out an IUL.
Yeah.
Okay, and that's not great for business, right? Uh-oh. Are you still there?
Yeah, I'm here.
Okay, okay. Yeah, and so that's not great for business. And yeah, and so in other words, they'd rather underpromise and outperform. Does that make sense?
Yeah.
Okay.
Now, why are there two columns, accumulation value and surrender value?
Okay, we're fixing to get into that. Okay.
Okay.
All right. So you see this right here is that if you put this $12,000 a year into it in 20, by the time you're 67, if you decided you wanted to start drawing money from this, you could draw $45,648 conservatively for the rest of your life and never run out of money.
Hmm.
Okay. Now that's tax free. So that's the same thing as drawing at about $65,000 a year for the rest of your life before
Nice.
taxes. Okay. Now, frankly, this right here, that's nice. This is retirement supplement money. That's not necessarily retirement money. Okay. Where your retirement money comes in my opinion, this column right here is the most valuable column of the whole thing. And what this is your surrender value, because this is the column that you get to use as your bank. Now, let's just say that, for instance, you're gonna buy a car, okay? And it's a $40,000 car. And just for the sake of math, let's just say that you're going to go to you got two ways you could finance this. You could go to Bank of America and set up a loan, or you could or you could just pay cash for it or whatever. Okay, but you're going to go to the bank and you're going to set up a loan. And let's just, for the sake of math, you're going to set it up $1,000 a month for 48 months. You're going to pay $8,000 for this $40,000 car, or $48,000 for this $40,000 car. And so every month here, you write a check. It leaves your checking account and goes to Bank of America. Now, do you ever see that money again?
No.
No. Okay, it's gone. The Bank of America gets to use it, not you, right?
Right.
And if you miss a payment, does that affect your credit?
Absolutely.
And now at the end of 48 months, they're going to send you the title. You now own the car, so you're driving the car, you own the car, you possess the car, but Bank of America has the money, right?
Mm-hmm.
Okay, now let's just do this the second way. Let's borrow the money against your IUL, and I use the word against, not from, because when we borrow the $40,000, what you do is you open up your app on your phone, you go down to loans, and it says, "Hey, you can borrow $54,725." Well, I only need 40,000. 24 to 48 hours later, it'll be in your checking account. They don't even ask you what it's for. It's your money. Okay. You go to the dealership. You now pay for the car. You come home with the car and the title. It is your car. Okay. Now, if you treat your bank, Brown Bank, the same way you would Bank of America, and you say, "Hey, if I'd have done this through Bank of America, I was happy with $1,000 a month. I'm gonna pay Brown Bank $1,000 a month." So now every month you write a check for $1,000, and you send it where? You send it to your IUL. Now, after 40 months, you'll have that paid for. National Life's, when you borrow that money, you're not actually borrowing it from your IUL. You're actually borrowing it from National Life Group. National Life is going to use that 40,000 of that 54,000 as collateral on the loan, but it stays in your account still earning interest. So if the market goes up 10% one year, you made $4,000 on the money you just bought the car with. The next year, you made 4,400 or $4,400 on the 10% because now you got the 10%, 40,000 plus the 10%, and because you're still compounding. And so anyway, so after 40 months, you paid for the car. 42 months, you paid the car and you paid yourself back for the interest that National Life charged you because they charged you like 4.5% on that. And so now think of this. Right here, you now have the car, Neal. You own the car and you still have the money you bought the car with.
Mm.
Now let that sink in for just a second. Okay.
So just to make sure I understand, so you're saying that even though I'm pulling money out of my IUL, National Life Group is sending me their money, so my money continues to stay in there and compound.
Correct. You're borrowing the money. You're borrowing them. It's kind of like when you go to Bank of America and say you had an account there and you put $40,000 in a savings account at Bank of America, right?
Right?
And then somebody comes to Bank of America and says, "Hey, we want to buy a car. We need a $40,000 loan." Well, Bank of America goes to the Fed and says, "Hey, Fed, we got $40,000 of Neal Brown's money as collateral. Can we borrow $40,000 to loan to this guy for his car?" Sure. So they loan it to him for 1.5 points. They loan it out to this guy for 7 points. They're making the difference in it, and they're using your money as collateral.
Mm.
Well, what you're doing is you're using your money as collateral, but you're borrowing it from National Life Group.
Okay, got it.
Okay,
Mm.
and so your money never leaves your account. It's still sitting there earning interest.
Nice.
Now they're charging you 4.5%, but if you're making 7, you're actually making the arbitrage.
Got it.
Okay. Now think of this here. Okay. So now right here, you now own the car. You're driving it around, and you still have the money plus the interest the car made. Now, does that make the car free? No, because you paid the bank for the car. It's just that you happen to own the bank, so you get to use the money again.
Mm.
Pretty cool, huh?
Yeah, I like that.
All right. Now think of this. If I know you're in real estate, but you could do the same thing. Like my daughter, she bought it. She put $20,000 down on a house and set it up as an Airbnb. Her first year as an Airbnb, she made $22,000 on it. She didn't spend that 22,000. She paid it back, and then in the next year, she had over 40. She's already bought her second house. She put $32,000 down on it. Next month, she'll set it up. It'll be as an Airbnb for the first time. She's hoping to cash flow 20 to 30,000 on it. And so she's already in 2 years built up $40 to $50,000 in passive income, and her IUL's helping her do that. Now her goal is over the next 10 years, or 7 years actually, is to own 10 houses that's bringing her in $20,000 a year plus. So she's using her IUL to help her build $200,000 a year passive income. This is where retirement money's made.
Mm.
Does that make sense?
Yeah, that's good.
Okay.
Hey, Dan,
Now,
what if we put 1,500 a month in? What does that do to the retirement income?
okay. Well, let's take a look. So if we did this at $1,500 a month, your death benefit's going to move up to 309 because your MEC is going to go up to 18,000, right? So
Right.
so you're 309,000, and so for you now you'll have, instead of 45,000, you'll have 70,000.
Wow. Makes a big difference.
Huge difference. Plus, remember, plus you're building up your cash is going to start building up a lot faster. See, like when when you're 50, when you're 55 here, you've got $250,000 right here. When you're 60, you got nearly $500,000. That right there is that's multi-unit housing right there that
No
you could
kidding.
down payments on that. That's what that's for. It, Neal, do you have any questions so far?
Go over one more time, MEC premium.
MEC. Okay. So the MEC is the only, like I said, it's the only place the IRS has a say so in your IUL. Okay. And so you see that how this changed. This what used to be when we did 1,000, that was at 12,000, right?
Right.
Remember that?
Yep.
And then when it was 1,000, this was like 205,000, not 309,000.
Right.
Because the IRS says, hey, for your age, for a 45-year-old, if you're gonna have $309,000 in death benefit, the maximum amount that you could put into this is 18,000 a year. And if you put a dollar more than that, we're not going to consider this life insurance. We consider a retirement fund. Okay. And actually, the true MEC or there's, you see these two numbers here, right here. There's guideline level and there's a MEC.
Right.
Okay. This right here is actually it's a number. In the first 7 years, you could put $21,245 into it, probably twice without messing up your policy. But pretty much 18,000 after that is your MEC.
Got it.
Your true MEC is the lower of these two numbers.
Okay. Gotcha.
Okay. All right. But this is the only place that the IRS has a say so, and that's a function of if your age times your death benefit, they're going to come up with a number that's the maximum amount that you could put into it. Basically, kind of think of it like this: if you took out $1 million worth of life insurance and put $500,000 a year into it, that ain't insurance, right?
True. Yeah.
Okay.
Yeah.
So the IRS has a formula that says, hey, you're 45 years old. If you want to put $18,000, more power to you, but you got to buy $309,000 worth of life insurance.
Got it. Got it. No, that was my only question, Dan, was that. I mean, it all makes sense.
Yeah. Yeah. Okay. Well, let me explain to you what the process here is. Okay. Because this is it, life insurance, so we have to apply. Now, when you apply, you go through underwriting, and that takes anywhere from 3 days to 3 weeks. And when you go through underwriting, they're going to come back with a decision. They're either going to decline you, in which case nothing happens, or they approve you, in which case they give you like 75 days to make any changes you want to it. So let's say that we applied at this $1,500 a month, and you got approved. And you get to thinking about it, and you go, I really like the way this works, and I really could do like $3,000 a month. And so we call them up, we make the change, you sign off on it, and you're off to the races. Or you could go, maybe my eyes are bigger than my checkbook, and I'd feel a lot better at maybe $1,000 or $1,200 a month. And so we call them up, we make the change, you sign off on it, and you're off to the races. So the real question, Neal, is that what would you want to apply? Would you want to apply at this 1,500 we illustrated here, or would you want to do higher or lower?
Well, I think I need to think about it for a little while, and then get back to you.
Well, I understand. Yeah, I mean that makes sense. It's sorta okay. Because here's the thing, you're going to go through underwriting, okay, and you're either going to get declined or you're going to get approved, okay. And so you could say, hey, Dan, I want to run spreadsheets and figure out exactly what I want to do here. And you spend the next you spend 8 hours over the next 4 days going through spreadsheets and your budgets and all this, and you call me up and say, hey, Dan, let's apply. And so we apply and you get declined. You just wasted 8 hours and 4 days.
Hmm.
Okay. Or we could just apply. And then if you get approved, that's when, because you can make changes, that's when you run your spreadsheets. Does that make sense?
Yeah, that makes sense. That makes sense. So the question is 1,500 or 1,000?
1,500, 1,000, 2,000, whatever your budget is, you let me know, and then we can just apply for that. But understand too, once you get approved, we can up it, lower it, we can do
We can
whatever.
change it at that point?
Correct.
All right. So let's go ahead and apply at 1,500. I'm pretty comfortable with that.
All right. So let's see here. Let me save this.
Dude, you spelled my name right.
Oh yeah.
I'm so, there we
All
go.
right. Oh yeah. And I want to set this up here for.
Perfect.
All
Glad to
right.
see.
And so we save this. And so now, Neil, they're going to ask me for your driver's license number. So if
So,
you don't
hey,
have that,
hey, Dan, can I ask you a really quick question? I'm sorry to interrupt, but you just went through really quick how you selected the indexes, and you didn't. You don't talk to the clients about the
no, I do not.
indexing? You don't even get into it.
Why? What do they know about it? Why? I mean, they don't know anything about it.
All right, no, I was just curious. You just fill it out and just don't even go down that highway with them.
Correct.
If they ask you a question, like because
Oh,
some people are
if
more
they
into.
said, "Hey, what's this about?" I say, "Well, this right here is right now the S&P is doing better, so we're going to set this up at a 90/10." And they go, "Oh, okay."
All
Perfect.
right, okay.
Yeah. So, Dan, that was fantastic. I do your close word for word how you do it because I called you that one day and I recorded you.
Uh-huh.
So let's open it up for questions. I'm sure there's just a ton of questions, but that was
Oh,
beautiful.
you got interrupted when you were saying something about the driver's license?
Oh,
Oh
oh,
yeah, finish that.
yeah. Basically, the way I finished, you know, I asked to say so, and this is I want you to understand something else too that's very important because Neil answered that question, my closing question, uh, very quickly, but I want you to understand my close is this, okay? When I say, hey, I've shown him the illustration, and I could get into more detail. I don't really have to. He understands how it works. And hey, Neil, do you have any other questions? Okay, no, great. Let me explain to you what the process is. Okay, this is my close. Neil, let me explain to you what the process is. This is insurance, so we have to apply. When you apply, you go through underwriting. That takes anywhere from 3 days to 3 weeks. And when you get through underwriting, they're going to come back with a decision. They're either going to decline you, in which case nothing happens, or they approve you, in which case they give you 75 days to make any changes you want to it. So let's say that we applied to this $1,500 that we illustrated here, okay? And you got approved. And you get to thinking about it, you go, I really could. I like the way this works. I really could afford to do $2,000 a month or $2,500 a month. So we call them up, we make the change, and you sign off on it, and you're off to the races. Or you could say, you could get thinking about it, go, hey, maybe my eyes were bigger than my checkbook, and I'd feel better doing this at like $1,200 or $1,000 a month. So we call them up, make change, you're off to the races. So the question is, Neil, at what would you want to apply for? Would you want to apply for the 1,500 we illustrated, or would you want to do it higher or lower? And then I shut up. I zip it. I don't say another word till Neil does. That's very important.
Yeah, let's go ahead and apply at the 1500.
Okay, great. Okay, and all right. So Neil, and I'm hitting save and all this kind of stuff, and I'm saying, hey Neil, they are going to ask me your driver's license number. So if you don't have that memorized, you might go ahead and find it for me. It's about 3 pages in, so there's no rush. And then I'm setting this up here right here, and then I hit the green button to go to the thing.
Now, do you ask them you'll need a routing number and a checking account, or
Yeah, I do that when I get to that point in the app. What I mean,
well, I know a lot of
I just
people
ask them the
get
questions. I fill out the app. I don't get ahead of anything.
well, I know a lot of people get to the banking information and they say they don't have a checking account or whatever.
Well,
So
if you're doing that, you're talking to the wrong people.
yeah, true.
Okay. Yeah. Yeah. I don't talk to people who don't have checking accounts.
So you basically all you do is you tell them that they're going to need a driver's license. So go ahead and get that, and we'll get this started.
Yeah. Because I'm basically telling them we're filling out an app with that
Right.
with verbiage right there.
Yeah, Dan, that's awesome. That's really
And
good.
and then I just fill out. I just start filling out the app, and that's pretty straightforward. Um, because I showed them my driver's license and my state license and had them take a picture of it, I never ever get anybody who doesn't give me their social security number. When it comes to the social security, I don't do the trick like go to the bottom of the page and have them fill out all the other stuff and then go back up and ask them the social security number. The first question on there is, "Hey, what's your social?" Boom, they hand it to me. I never get that objection. I
can
never get an
second that,
objection
Dan.
about the checking account ever.
Hey, Dan,
me neither.
there's a question in the comments, the chat about can you do a state ID versus a driver's license?
Sure. Yeah, that's always the case there. There is no requirement with insurance that somebody be a driver.
Yeah, we just had somebody, Brian DeBoer, just got an app approved where the guy didn't have a driver's license.
Oh yeah, I've done it. I mean, you think of a kid. I mean, how many 16-year-old or 14-year-olds have a driver's license? None of them.
Right.
I mean, they
Well,
don't.
guys, let's open it up if and you can keep sharing your screen. But if anybody has any questions, just unmute yourself and we'll get through as many as we can. We need to keep it to about an hour, but we've got some extra time here while we got Dan.
Hey, Dan, it's MJ. Thanks so much. You're always such a great, I don't want to say teacher, but sharer of information. I mean, I guess that's a teacher, but so when you do these, do you get referrals? Do you do multiple, like spouse? I mean, you did Hall of Fame. So are you doing them all on leads or are you getting referrals too? How do you work that?
When I get referrals from when I call them back, really, when they're after they get their approval, stuff like that. Then I'm calling them, and then we're talking about their wife, their kids, or their friends.
Yep, that makes sense.
And I'm going over with them about like if I forgot to do the interest rate thing, and I have it 100% the pace setters, I'm having them open up the app and I'm walking them through changing that on their app.
Okay, let's see. Let's go in the chat here. We got a couple questions. On the Dave Ramsey, who absolutely despises variable universal life policies, how do you handle that if you get that objection?
Generally speaking, the people that come to us, they're already past that because they're calling because they want to find out about the IUL. I can't remember having that conversation with anybody in the last several years.
Yeah, me neither.
If you're having that conversation, then maybe in the part of you're bringing it up, so you're having that conversation.
Well, yeah, I've gotten that, just in discussions, and what I tell people is, look, Robert Kiyosaki says that there's three sides to a coin. Dave Ramsey has his point of view. You have researched the IUL, and there's that point of view, and you've heard my point of view tonight. And then the edge is your decision on what you believe. But he is, of course, he represents Xander Insurance, so they sell term insurance.
Yeah.
Anyways, okay, let's see. What other questions do we have in the chat here? Once a loan is given, then are you still constantly contributing?
Okay. Well, in fact, one of the things here that you can do is if you have to do a second close with somebody, and say, oh, by the way, let me explain to you something here, okay? Because let me explain to you the proper way, the prudent way to use your IUL, okay? Because an IUL can be abused, and what I mean by that, Neal, is like IULs, the first 12 years, 10 to 12 years, they're designed to have money in them. And what I mean by that is that in the first 10 to 12 years, or actually between now and the time you retire, really, you need to follow two rules with your IUL. Number one, only borrow from your IUL for things that you use a bank for anyway, or rule number two, or for things that make you money, period. Now, why? Because if you borrow from a bank or even a credit card, you're going to pay that back, right?
Right.
Okay. And if you use it to invest in things that make you money, then exercise the discipline not to spend that money but that you make on that investment, but to put it back in your IUL. Well, why? Because when you say you use $50,000 to buy you a house, a rental property that you use at Airbnb, and you cash flow $30,000 a year. Well, let's say you take, these are unstructured loans. Let's say you take 4 or 5 years to pay that $50,000 back. Okay. You want to pay it back. Why? Because now you've got that same money you just bought that first house with. You have now to use the same money to buy a second property. Now, what's your rate of return, Neal, on money that you get to use 2 and 3 and 4 times between now and the time you retire? It's infinite. That's why they call this infinite banking.
Yeah, it's infinite for sure.
Yeah. And so now when you retire, that's when, and in fact, I'm going to take this distribution off right here, because we're not going to make a decision today for what you're going to do 20 years from now, right? Okay. And but when you have the 70 something thousand right here, okay, you can use that to draw, hey, you need $40,000, for to go to a vacation. You're going to take MJ to a vacation to the south of France. Man, you take her. You want to go do an African safari, here this next year, or you want to go see the penguins in Antarctica. You take the whole family down there. Whatever. That's when you borrow money and don't worry about paying it back. Because if you say you were 80 years old and you had $500,000 out, your family's going to get $1.6 million less the $500,000 in the loan. So your death benefit's going to pay your loan back.
Nice. Let's see. We had a couple more questions here. Saeed had a question, which is, yeah, Dan is experienced in life insurance. So if during the discovery call, he would have found out if I was married or not, and he would have set up a time for me and MJ to be on the call, because we don't want to do one-leggers. We know how those end, and it's not good. Charles had a question. What's the most common objection you get, which is a great question?
I would say, I don't know. Yeah, probably the most common one is yeah, I want to do more research or something like that, or that's the same thing as thinking about it. That's the most common one. And I'd say probably 70 to 80% of them end up going ahead. Like when I explain to them, say, that makes sense and everything, I understand you feeling that way. But but here's the thing. You could spend the next 3 weeks or 5 days or 3 weeks going through spreadsheets, figuring out exactly what you wanted to put into your IUL, and then give me a call up, say, let's apply, and you get declined. You just wasted, all that effort and time in thinking about something you couldn't have.
Yeah, no, you handled that. Think about it. Great on the
And I'd say 70 to 80% of those, they go, yeah, that makes sense. And they just go ahead and apply.
Now, what about the people, Dan, that are going, hey, I want to talk to my CPA or my financial advisor?
I really don't get a whole lot of that. Except maybe in people who are they might, if they're worth 5 million or more or something like that. Sometimes you get that, and you understand that if you're doing $100,000 one, you're not going to close that the first day. So you may end up doing a presentation to the CPA to them later.
That's what I would do.
Yeah.
Another question. Ballpark. So you're at $70,615 this month, issue paid. How much do you think you've spent on leads this month?
I spent like 12,000.
Okay. And is that a typical month?
Yeah.
Okay. So the reason you do big volume is because you're spending generously, you're reinvesting in leads. So that's your marketing, right?
Yeah. You be careful, and Neal's exactly right. You need to be very, very careful, and don't try to go find one on your own and say, oh, I found the next best thing, because chances are that's not. If you're struggling with money right now, then only buy vetted leads that Neal says, hey, these are good.
Yeah, yeah. If Francis hired you, ask Francis. Don't skin your knees and waste your money on this stuff.
Right.
If Neil brought you
If
in,
once you're making $60,000 a month, then go start experimenting on leads.
Right. And trust me, we're constantly, how many times do I text you, Dan? Hey, are you on PCG leads? Constantly.
Yep.
Well, listen, guys, let's leave it at that. There's a ton of questions. I guess the last comment I want to hear Dan kind of weigh in on is if because we do have a lot of new people, and when you're new, there's like this hesitancy to get moving, to get leads and start working. So, what's your recommendation on how to get yourself off the sidelines and into the game?
I would say you need to make a decision today. If you're going to be in the insurance business, then spend money on leads. If you're not willing to do that, then go find then mow grass and or cut firewood or do Christmas tree stands or whatever you need to do to make money till you get enough money that you're comfortable spending money on leads, and then come back to insurance. Because if you're not spending money on leads, you're not in the insurance business. You're just deceiving yourself.